I'm Bob Fenster with the local lending pros at Green Tree Mortgage, and you're watching Mortgage Hacks. Have you heard the new buzzword in the mortgage world? It's loan level price adjustments. Okay, so it's 4 words, but the 4 words have been in the news a lot lately, with media outlets screaming about how they're raising interest rates for good credit home buyers. Did you know there are workarounds that will let millions of home buyers avoid the adjustments and get the best rate on the rate sheet? You probably didn't, because not a single news source has mentioned it. Rather, they're all beating a drum trying to make a political point. Let's skip the political noise and take a look at exactly what's changed. Loan level price adjustments, or LLPAs, have been with us since the financial crisis. They're the tool Fannie Mae uses to price the risk of a loan. The higher the default risk, the higher the interest rate. Fannie Mae recently made changes to this tool, and that's what ruffled all the feathers. A loan level price adjustment changes a buyer's interest rate. As their credit score or down payment goes down, their interest rate goes up. These adjustments are modified from time to time to better reflect the default rates that Fannie Mae is experiencing at various credit score and down payment levels. Let's take a look at the old system versus the new. What you see here is a calculator which shows how a homebuyer's interest rate will change with a change in credit score or down payment. Note that you see the LLPA factor in green and how it affects the interest rate in black. It's not an exact relationship, but typically you take the LLPA factor, divide by 3, and that is about what's added on to your interest rate versus the best rate on the rate sheet. As you see, your LLPA factor and rate go up as your credit score and down payment go down. Please note, contrary to some rumors and news stories you may have heard, at no point does your interest rate improve with a lower credit score. So that advice to ruin your credit to get a better interest rate, ignore it. So you're thinking, this stinks. My credit is good but not perfect. I don't want to have to pay more for my mortgage. Well, here's the hack. I wouldn't be the loan officer extraordinaire if I didn't have a workaround. You may be one of a large number of first-time homebuyers who can avoid these price adjustments by having a qualifying income that is at or below your area's AMI, which stands for Area Median Income. I'm talking to you from just outside of Philadelphia, and for most of the Philadelphia metropolitan area, the AMI is $114,400. So, people with qualifying incomes of $114,000 a year or less can skip the loan level price adjustments and go straight to the best rate on the rate sheet. Notice I said qualifying income. The program is very flexible, and even if your total income is over the AMI, you may still avoid the rate add-ons with a lower qualifying income. Here's how it works. Take this couple. They're buying a home. One of them makes $80,000 a year, the other makes $90,000. Together, they're well over the $114,000 area median income. But if they can qualify for the home they want on just the one income of $90,000, they can avoid the loan level price adjustments. The Fannie Mae workaround goes like this. Even though both of their names are on the mortgage application and both of their names are on the title to the house, we only put the one job and one income on the application, keeping them under the $114,000 limit and giving them the best available rate. Meeting the first-time homebuyer requirement is easier with this program than with most. If one of the members of this couple currently owns a house, but the other one doesn't, then we can use the income from the non-homeowner and approve them for a loan with no price adjustments, again sending them right to the best rate on the rate sheet. Similarly, a buyer with a $100,000 annual salary who received a $30,000 bonus each of the last 2 years has a total income over the $114,000 AMI limit. But if this person qualifies for their mortgage on just their $100,000 annual salary, that's all we put on the application as qualifying income, leaving them under the $114,000 limit They too are exempt from the LLPAs and go straight to the best rate on the rate sheet. What it means is that many, if not most people, buying a home for $400,000 or less qualify for the exemption and a sweet deal on their interest rate. Other conditions and restrictions may apply. To see if you qualify for this workaround or other programs or exemptions that can lower your interest rate and your monthly payment, call me, Bob Fensterer, with the local lending pros at Green Tree Mortgage. You can reach me at 856-341-6636. My phone is always on.